Let's start right there with FedEx. Big earnings report and their big beat numbers for the last quarter were better than expected, but guidance was a little light. What are you making of the results we saw yesterday?
You know, it was really a kind of I think, a symptom of this subscription-based economy. When you look out at where we are today, more people want it, and they want it delivered to their house, and that's exactly what we're going to see. And so these big shippers like FedEx and UPS are going to continue to benefit from that shift into overall demand for needs at the helm. And with FedEx, you know, they've always been a really strong dividend payer. That's kind of one of our metrics that we like to look at for the health of the business. They've increased their dividends almost 25% per year for the last 5 years, and we don't see that stopping in the near future. It's one of our strongest dividend growers on a dividend health perspective. So
we see the stock up 1.5% today. There's a chart, and of course, over the past year, up about 29% or so. Now, FedEx, we know, in addition to UPS in this space, and certainly has a large, obviously a huge presence there, but also concerns about Amazon, and Amazon trying to get into the logistics business. Is there anything in this report that would suggest to you that this run that we've seen, this big run that we've seen in FedEx and the stock recently, can extend and go beyond the next several quarters?
Well, actually, so I think that's the key point here is Amazon's got a significant lead time before they can produce their own logistics business. That's going to obviously impact the FedEx margins over the long run, but in the short run, we have continued demand from Dollar Shave Club, from all the groceries, from all the different businesses that are looking into logistics and trying to figure out a way to solve this kind of subscription-based economy. That we don't think is a near-term hit to FedEx's earnings. In fact, we think that the FedEx earnings are just going to continue to grow as they did. They surprised here, and part of that was their acquisition of TNT, which is a Dutch shipping company. You know, they're not going to stop just because Amazon has an interest in taking over some of that business, and Amazon won't ever be able to fully integrate that business on their own.
Do you see a direct impact over the big Whole Foods announcement from last week as it pertains to Amazon, specifically relating to FedEx? Or do you think that FedEx may be one of the companies at least a little bit less affected than others in the space?
Well, actually, I think that they'll be a benefactor or beneficiary of that. Just again, in short run, as Amazon tries to figure out how to then monetize this Whole Foods asset. You know, the Whole Foods asset is no matter how you look at it, whether it's a brick and mortar or whether they start to monetize that brand and that buying power and that imagery of kind of the health aspect of it, it still has to get somewhere. And so FedEx fits right into that from so many different ways. You know, they fit into it, whether it's shipping to the home or whether it's shipping to the brick and mortar store. That's still going to be a big part of FedEx's business.
Well, for Amazon too, I mean, do you think that this is a company that can be a success in the logistics business?
Yeah, I would never throw in the towel on Amazon to innovate. Amazon continues to surprise everyone in so many different ways, in so many different areas of just kind of making that consumer experience better. And so, again, you know, I can't justify the valuation, but I can't fight against that valuation because, again, that's innovation. You know, with innovation, you come up with all sorts of breakthrough opportunities to disrupt different business segments. No one ever thought for a million years that Amazon would be a server business as well as a bookstore, 15 years ago, and that's exactly what they are. So I think Amazon stands a strong opportunity to take some of this market share away. It's just going to take a lot longer than I think a lot of people think.
All right, Eric, so this is a strong quarter for FedEx, but we may have a lot of viewers who look and say, well, presumably it's Q4 that's going to be the strongest for any shipping and major parcel delivery service with the emphasis on holiday shopping. Is there any elements to FedEx's recent history over the course of the last few years you can walk us through? Is that largely how it fits in? Does that tend to be the strongest quarter for a company like this?
Yeah, they've done an excellent job of getting into the overall logistics business for again, kind of these monthly subscription programs and where it is a more dialed in subscription-based service. But by and large, across all of these different shipping companies, that's when everything really happens. So we look to the fourth quarter really to understand A, what the consumers are doing, and then B, what is the who's taking market share from who in the FedEx UPS battle, if you will. they, just over the past 5 years, both of the two big shippers, FedEx and UPS, have really dominated and grown and continued to grow. And so there's plenty of business to go around, and I don't see that stopping anytime in the near future. Really, it's a consumer-based approach, and that consumer hasn't even budged at all. So.
About that all-important holiday quarter, we just heard that UPS announced this week that it's going to raise its package fee during the Christmas holiday season, 27 cents to 97 cents now for FedEx. Again, the all-important quarter. You think it makes sense to do the same as we see prices increase, or do you think that it can still be competitive keeping those prices where they are?
Well, that I think is the biggest thing, is competition here. So how do we handle, and this is not any different than any other businesses, you have to evaluate what your competitors are doing and then decide how you want to react. Do you want to follow that lead, or do you want to actually stay put? Because a lot of these businesses are somewhat sticky. The average home person will choose FedEx over UPS based on the price. But a logistics business, a business that's heavily integrated and tied into FedEx, that's a big decision, and that's not something that you make lightly of just switching over your vendor in terms of shipping. So I think that any kind of small pricing changes will have lasting effects in the long run, and that you can evaluate and decide if you want to change your pricing immediately in order to stem some of that.